Austin, Texas, once the poster child of America's pandemic housing boom, now finds itself at the epicenter of one of the most dramatic downturns in the real estate market. For years, Austin embodied opportunity, a thriving tech scene, rapid population growth, and homes that promised both lifestyle appeal and strong returns. Buyers from across the country, flush with low interest rates and pandemic-era relocations, flocked to the Texas capital. Median home prices surged to nearly $667,000 at the 2022 peak, more than $200,000 higher than pre-pandemic levels. But today, Austin has become a cautionary tale of what happens when a market overheats too quickly and cannot sustain its momentum. According to data from Parkle Labs, Austin's housing market is firmly in bear territory. Prices are more than 20% below their peak, and experts predict further declines of 16.5% in the coming year. This puts Austin at the top of the list nationally for expected housing corrections, an ominous distinction that underscores just how far the city has swung from boom to bust. The median sale price in May 2025 was $557,500, already 5% lower than a year earlier, and well below the inflated highs buyers had been competing for not long ago. Behind this reversal lies a perfect storm of factors. First and foremost, the rapid rise in interest rates has dramatically reduced affordability. During the pandemic, 2 to 3% mortgage rates allowed buyers to stretch their budgets and bid up homes. Today, with mortgage rates hovering between 6% and 7%, the same home feels far more expensive, pricing many buyers out. At the same time, inventory in Austin has climbed to levels not seen since 2016, with more than 12,500 active listings by mid-2025. That surge in supply has shifted power decisively away from sellers and toward buyers, who now enjoy more time, more options, and stronger negotiating leverage. Adding to the pressure, Austin's identity as a magnet for company relocations and tech investment has lost some of its shine. While the city once seemed poised to rival Silicon Valley, enthusiasm from large firms has cooled. Public perception, too, has shifted. Fewer people see Austin as the next big thing for innovation or culture. For homeowners who bought near the peak, the combination of high mortgage costs and declining property values has created real pain, with many holding loans at 7% or higher and watching their equity erode. Yet local experts emphasize that this decline, as harsh as it may feel, represents a necessary normalization. The pandemic years pushed Austin's housing market to unsustainable heights, and what's happening now could be seen as the market correcting itself back toward balance. Buyers, especially first-time and moderate-income families, are finally finding breathing room after years of bidding wars and frenzied competition. For them, Austin's cooling market offers a chance to purchase a home at a more reasonable price, with time to consider options carefully rather than being forced into rash decisions. Still, the road ahead will not be smooth. Analysts expect further price declines in the near term, especially as seasonal inventory peaks in the latter half of the year. Sellers will need to adjust expectations, realizing that the days of multiple offers well above asking price are over, at least for now. And buyers, while enjoying newfound leverage, will continue to face challenges with mortgage affordability and less interest rates ease. Austin's role as the centerpiece of Texas real estate makes its trajectory particularly significant, serving as both a warning and a lesson for other booming markets across the state. In many ways, the city captures the story of the broader Texas housing market: extraordinary growth, followed by a necessary reset. Looking beyond Austin, the wider Texas housing market tells a story of cooling momentum and a gradual shift away from the explosive growth seen in the pandemic years. Across the state, home prices have largely leveled off, with the median price inching up just 0.3% year-over-year. This tiny increase is a stark contrast to the double-digit surges that defined the market between 2020 and 2022. Instead of runaway appreciation, 2025 has ushered in an era of stability, where modest adjustments are replacing the frenzy that once dominated. One of the clearest statewide trends is the surge in inventory. Active listings in Texas jumped more than 30% from the previous year, rising from about 101,000 to nearly 133,000 properties. That's a dramatic increase, creating a far more favorable landscape for buyers. In fact, total housing supply in the first quarter of 2025 reached 4.8 months, compared to 3.7 months in 2024. While still shy of the 6-month threshold that traditionally signals a fully balanced market, the shift is significant. Buyers no longer face the intense scarcity that once pushed prices ever higher. Instead, they now have a growing pool of homes to choose from, easing competitive pressure. This increase in supply has also translated into longer transaction times. On average, homes in Texas now take 105 days to sell, up from 98 days the year before. That additional week might not seem monumental, but it reflects a broader pattern. Buyers are less rushed, and sellers are adjusting to a slower market. The state's closed sales volume dipped slightly, down about 1.5% year-over-year, further proof that activity has cooled. Sellers who once commanded the upper hand with multiple offers and bidding wars are finding themselves in a very different reality, where patience and flexibility are increasingly required. What makes Texas stand out is that, despite the slowdown, it hasn't tipped into crisis. Unlike some overheated markets that are seeing sharp corrections, most Texas metros are showing resilience, with only minor price shifts up or down. Houston, Dallas-Fort Worth, and San Antonio are all experiencing relatively stable markets, with price changes ranging from modest increases to slight declines. Even Austin, where the downturn has been steepest, is part of a larger state trend that leans toward normalization rather than collapse. From a broader perspective, Texas still remains one of the most attractive states for migration. More people moved to Texas in 2023 than nearly any other state, second only to Florida. This steady inflow of residents helps anchor demand, preventing the kind of housing oversupply that might otherwise trigger a true crash. The key difference today is that newcomers have more options and negotiating power, while longtime residents see a market settling into balance after years of volatility. Overall, the Texas-wide housing trends in 2025 reflect a transition from breakneck growth and seller dominance toward moderation, balance, and sustainability. For buyers, this means more breathing room and a better shot at affordability. For sellers, it means tempering expectations and adapting to a new era in which pricing a home correctly, and waiting longer for the right buyer, has become the new norm. While Austin may dominate headlines, the state as a whole is experiencing a measured cooling, one that could ultimately create a healthier real estate environment for the years ahead. When it comes to understanding the Texas housing market in 2025, few factors weigh as heavily as interest rates. The affordability crisis that began with the Federal Reserve's campaign to fight inflation has reshaped the landscape for buyers and sellers alike. Gone are the days of historically low, pandemic-era mortgages that hovered around 2 to 3%. Today, rates are consistently between 6% and 7%, and this shift has fundamentally changed what it means to afford a home in Texas. For buyers, the increase has been staggering. A family that once could qualify for a $400,000 home with a low interest rate may now find themselves constrained to $300,000 or less, simply because so much more of their monthly payment goes toward interest. This reduction in buying power has pulled many households out of the market altogether, creating a noticeable slowdown in demand. Even those who remain determined to buy must make tougher trade-offs, settling for smaller homes, less desirable neighborhoods, or longer commutes in order to keep costs manageable. For sellers, higher rates present a different kind of problem. A significant portion of current homeowners locked in ultra-low rates during the pandemic. Selling now would mean giving up a 2 to 3% mortgage only to take on a 6 to 7% loan for their next property. That golden handcuff effect has discouraged many from listing their homes, contributing to the uneven balance of supply and demand. Still, in markets like Austin where inventory is already elevated due to overbuilding, the affordability crunch has amplified price declines as sellers struggle to attract buyers who can no longer stretch their budgets as far. The ripple effects extend beyond individual families. Texas markets have seen homes linger longer on the market, now averaging 105 days to close a sale, up from 98 a year earlier. Buyers have the time and leverage to negotiate harder, while sellers must face the reality that yesterday's price points are no longer achievable. Realtors across the state are reporting that deals are falling through more often, as buyers hit financial ceilings when lenders run the final numbers under today's stricter rate environment. Still, experts argue that the current interest rate environment, while painful, is part of a broader process of stabilization. By cooling runaway demand and tempering price growth, higher rates may ultimately pave the way for a healthier market in the long run. If inflation continues to ease, projections suggest that rates could decline modestly in late 2025 or into 2026, potentially unlocking more activity. For now, though, affordability remains the single biggest challenge for Texans dreaming of homeownership. The contrast with just a few years ago is striking. Where buyers once competed in frenzied bidding wars, they now approach with caution, calculators in hand, and a sharper eye on budgets. Texas still holds appeal with its relative affordability compared to many coastal markets, but even here, the strain of elevated interest rates is being felt deeply. Until rates come down, affordability will remain the defining barrier that shapes who can buy, what they can buy, and how the Texas housing market evolves in the years ahead. Migration has long been one of the defining forces behind Texas's real estate boom. Over the past decade, families, professionals, and retirees alike have been drawn to the Lone Star State for its relative affordability, job opportunities, and business-friendly environment. During the pandemic, that trend accelerated dramatically. People fleeing dense and expensive cities like San Francisco, Los Angeles, and New York saw Texas, especially metros like Austin, Dallas-Fort Worth, and Houston, as a place where they could buy larger homes, enjoy more space, and still participate in thriving urban economies. But as of 2025, that migration surge is slowing, and the demand dynamics in Texas are shifting in important ways. The numbers tell a clear story. Texas was still the second most popular state for movers in 2023, just behind Florida, yet the pace of arrivals has begun to cool compared to the pandemic's peak years. Part of the reason is affordability. As prices in cities like Austin and Dallas soared, the state's housing advantage relative to other regions began to narrow. While Texas is still cheaper than many coastal markets, the combination of rising home values and higher mortgage rates has eroded some of its historic appeal for out-of-state buyers. For those who came hoping for bargain homes and wide-open opportunities, the reality in 2025 looks more complex. Another factor has been the broader cooling of the U.S. housing market. Nationally, fewer people are relocating across state lines, a trend influenced by high borrowing costs, slower job growth in certain sectors, and the fading of remote work as a universal option. The pandemic-era freedom to move anywhere has given way to a hybrid model in which proximity to offices and affordability are back in focus. This shift affects Texas directly. While Austin and other metros still draw companies and workers, the days of being viewed as the next Silicon Valley or a haven for pandemic transplants are behind them. At the same time, internal migration within Texas remains strong. Many residents of higher-cost metros are moving to smaller cities or suburban areas, chasing affordability while staying within the state. This has supported markets like San Antonio, which continue to see steady, if modest, demand compared to Austin's steep correction. For buyers, especially those relocating from within Texas, the cooling demand from out-of-state buyers means less competition and more opportunities to secure homes at better prices. The impact on demand has been uneven. Cities that overbuilt during the pandemic, banking on endless waves of newcomers, now face excess inventory and sharper corrections. Austin is the most visible example, but even Dallas-Fort Worth has seen signs of oversupply in certain submarkets. By contrast, areas that kept growth more measured are faring better, with less volatility in pricing. All told, migration and demand shifts are reshaping the Texas housing market in 2025. The state continues to attract new residents at a national scale, but the frenzy has passed. Instead of a flood, the flow has become steadier and more sustainable. This new balance reduces pressure on infrastructure, cools overheated markets, and gives the housing sector space to normalize. For Texas, the long-term story remains one of growth, but growth that is slower, steadier, and far less chaotic than the wild pandemic years. One of the less discussed but deeply influential forces shaping the Texas housing market in 2025 is the legacy of construction during the pandemic years. When interest rates hit historic lows and migration to Texas surged, developers rushed to keep pace with unprecedented demand. Across Austin, Dallas-Fort Worth, Houston, and San Antonio, cranes dotted skylines and subdivisions stretched outward into surrounding counties. Builders, emboldened by rapid price appreciation and surging sales, added record numbers of new homes to the pipeline. But today, many of those projects are only just being completed, and they are entering a market that looks very different from the one that inspired their construction. In Austin, where the overbuilding problem is most acute, thousands of new homes and condos that were greenlit during the pandemic boom are now hitting the market. The trouble is, the demand that once seemed limitless has cooled sharply. Mortgage rates above 6% have narrowed the pool of qualified buyers, while the influx of new supply has tilted the balance of power away from sellers. This mismatch between supply and demand has fueled one of the steepest price corrections in the country, with Austin home values down more than 20% from their peak and expected to decline further. Dallas-Fort Worth and Houston face similar, though less dramatic, situations. Both regions saw massive construction efforts during the early 2020s, driven by rapid population growth and the influx of corporate relocations. While these metros still enjoy steady migration, the pace of sales has slowed, and the number of homes on the market has risen substantially. With inventory levels in Texas up over 30% statewide from last year, builders are finding that the once insatiable appetite for housing now requires deeper discounts, more incentives, and longer sales times to clear out their projects. The overbuilding issue is not simply about too many homes, it's about timing. Pandemic-era projects assumed that the demand spike was permanent, and that low interest rates would keep affordability intact. Instead, higher borrowing costs, a cooling labor market, and shifting migration patterns have undermined those assumptions. In some cases, developers are even shelving or delaying projects, unwilling to flood the market further until conditions stabilize. Yet there is a silver lining. For buyers, the construction boom has created options that were unimaginable just a few years ago. Instead of bidding wars for a handful of listings, buyers in 2025 can tour multiple new homes, negotiate upgrades, and take their time deciding. In some areas, builders are offering aggressive incentives, including mortgage rate buydowns, to attract wary buyers. This has created one of the most buyer-friendly environments in Texas in recent memory. Still, the long-term impact of overbuilding remains uncertain. If demand fails to rebound strongly in the coming years, markets like Austin could see prolonged periods of price stagnation as excess inventory weighs down values. On the other hand, Texas's long-standing appeal, its job opportunities, relatively low taxes, and cultural pull, suggests that, in time, population growth may catch up to supply. For now, though, construction has outpaced demand, and overbuilding stands as a cautionary chapter in the story of Texas real estate. The Texas real estate market cannot be understood as a single story. Each major metro area has its own unique dynamics, strengths, and challenges in 2025. While statewide numbers point to a cooling market and stabilizing prices, the regional picture reveals stark contrasts that highlight just how uneven the slowdown has been across the Lone Star State. Austin remains the most volatile of Texas's Big Four metros. Once celebrated as the poster child of pandemic growth, it has experienced one of the sharpest reversals in the nation. Median home prices, which peaked around $667,000 in 2022, have fallen by more than 20% and are projected to decline another 16% in the coming year. Overbuilding, waning tech sector enthusiasm, and surging inventory have combined to create a challenging environment for sellers. Buyers, however, now enjoy leverage they haven't had in years, with time to negotiate and a wide array of choices across both new construction and resale homes. Dallas-Fort Worth tells a different story. The Metroplex, long a magnet for corporate relocations and steady population growth, has avoided the extremes seen in Austin. Prices in DFW have edged upward slightly, around 0.5%, despite broader cooling. Inventory is up, and homes are taking longer to sell, but the local economy remains a stabilizing force. The region benefits from diversified industries, including finance, logistics, and technology, which continue to drive demand even as affordability challenges temper the pace of transactions. Houston's market, too, reflects stability rather than decline. Median prices rose by about 1.4% from last year, a sign that supply and demand are finding balance. Energy and healthcare remain major anchors of Houston's economy, supporting housing demand even as national headwinds slow momentum. That said, the city faces challenges from climate-related insurance costs and infrastructure pressures, which could weigh on long-term growth if left unaddressed. Still, compared to Austin's turbulence, Houston appears to be weathering the storm more smoothly. San Antonio represents the quiet achiever of the Texas real estate landscape. While its prices dipped slightly, down about 0.3% from 2024, the city continues to attract steady demand thanks to its relative affordability. For many Texans priced out of Austin or Dallas, San Antonio offers a viable alternative with lower median prices, around $299,000, and a growing local economy. Its military presence, healthcare industry, and cultural appeal provide a consistent base of buyers, cushioning the city against the volatility experienced elsewhere. Taken together, these regional differences reveal a key truth: the Texas housing market is not monolithic. Austin stands as the outlier, enduring one of the nation's sharpest corrections. Dallas-Fort Worth and Houston, by contrast, are steadying, offering resilience amid uncertainty. San Antonio, with its affordability and stable demand, provides an example of how moderation can keep markets balanced. For buyers and sellers, understanding these regional nuances is essential. A headline about Austin's decline may not apply in Houston, just as a story of resilience in DFW won't capture San Antonio's affordability advantage. In 2025, Texas real estate is a patchwork of diverging paths, each shaped by its own economic, cultural, and demographic forces. To fully understand Texas's housing market in 2025, it's essential to place it within the broader context of the national real estate landscape. While Texas has been experiencing its own mix of volatility and stabilization, the U.S. market as a whole is undergoing similar shifts, with some regions booming while others struggle. The comparison reveals both the unique pressures facing Texas and the broader economic trends influencing all American housing markets. Nationally, the median price for existing single-family homes in metropolitan areas reached $402,300 in the first quarter of 2025. That's nearly $71,000 higher than the Texas median of about $331,000, underscoring the state's continued reputation for relative affordability despite recent turbulence. But while Texas home prices rose only 0.3% year-over-year, the national average increased by 3.4%. This suggests that while the U.S. as a whole is still seeing growth in housing values, Texas is moving more cautiously, with slower appreciation and, in some areas, outright declines. Breaking the country into regions paints an even clearer picture. The Northeast has experienced dramatic price growth, with values climbing over 10% in the past year, driven by markets like New York and Boston. The Midwest and West have also seen solid increases, 5.2% and 4.1% respectively. Even the broader South, which includes Texas, saw a modest gain of 1.3%. In this context, Texas's 0.3% price rise stands out as an underperformance, reflecting the state's cooling demand and elevated supply. Yet, Texas's slower pace comes with important caveats. Unlike overheated coastal markets that remain prohibitively expensive, Texas still offers a level of affordability that continues to attract buyers, especially from out of state. For many families relocating from places like California or New York, even a $400,000 home in Texas represents significant savings compared to what they could buy back home. This affordability edge, though narrowing, remains a competitive advantage for Texas in the long run. Texas also benefits from its economic resilience. While national housing trends are heavily tied to interest rates and consumer sentiment, Texas continues to draw migration and corporate investment, albeit at a slower rate than during the pandemic. This provides a buffer that keeps the market from experiencing the kind of steep corrections that might occur elsewhere if demand were to evaporate. The comparison also reveals how Texas's challenges, such as overbuilding in Austin or affordability strain in Dallas, mirror broader issues seen nationwide. Many U.S. metros are grappling with the same combination of high mortgage rates, slower sales, and shifting demand patterns. The difference is that Texas's identity as a high-growth state has magnified these effects, especially in cities that soared fastest during the boom years. Ultimately, the national versus Texas perspective shows two sides of the same coin. On one side, Texas lags the country in price growth, signaling a market under pressure from supply and affordability concerns. On the other, Texas remains far more affordable than the national average, keeping it attractive for buyers looking for better value. This duality captures the essence of Texas real estate in 2025, a market cooling faster than the nation, yet still positioned as a relative bargain in the American housing story. For years, Texas homebuyers were locked in a high-pressure environment where speed and deep pockets were the only ways to compete. The pandemic housing boom saw frenzied bidding wars, homes selling above list price within days, and buyers waiving inspections or contingencies just to get a foot in the door. But in 2025, the tables have turned. Texas is steadily shifting into what experts call a buyer's market, where those looking to purchase finally hold the upper hand after years of being at a disadvantage. The change is largely driven by a surge in inventory. Across the state, active listings are up more than 30% compared to last year, creating a level of choice buyers haven't seen in nearly a decade. In Austin, where overbuilding has left thousands of homes sitting unsold, the supply glut is especially pronounced. Even in steadier metros like Houston or Dallas-Fort Worth, buyers now have multiple options in their price range, often within the same neighborhood. This abundance has stripped away the sense of urgency that defined the market just a few years ago. Another hallmark of this emerging buyer's market is time. On average, homes in Texas are taking 105 days to close, nearly a full week longer than last year. That extra time gives buyers the ability to carefully evaluate properties, negotiate concessions, and avoid the reckless decision-making that once characterized the state's housing rush. Realtors are reporting that many buyers now submit offers well below asking price, expecting, and often receiving, significant reductions, especially on properties that have lingered on the market. Sellers, meanwhile, are being forced to adjust their expectations. Gone are the days when simply listing a home guaranteed multiple offers. Instead, many homeowners must be more realistic about pricing and open to negotiation on repairs, closing costs, or financing incentives. Builders, in particular, are sweetening deals with upgrades, rate buydowns, and other perks to move new construction homes that might otherwise sit idle. For buyers, this environment provides opportunities not seen in years. First-time homebuyers, who were sidelined during the pandemic by skyrocketing prices and stiff competition, now find themselves with more accessible entry points into the market. Moderate-income families can shop with confidence, knowing they won't be pressured into hasty decisions. Even investors, who had pulled back during the height of price surges, are beginning to re-enter the market, attracted by the potential for better deals. Still, affordability remains a limiting factor. Higher interest rates mean that, while buyers can negotiate lower prices, monthly payments are still elevated compared to the ultra-low mortgage era. This has tempered the pace of sales, keeping the market from overheating again. The balance, however, has undeniably shifted. In 2025, Texas buyers no longer chase homes in desperation. They shop with patience, leverage, and choice, clear signs that the era of the buyer's market has arrived. While local factors like inventory and interest rates dominate much of the Texas housing story, external pressures are increasingly shaping the market in 2025. Rising home insurance premiums, shifting federal trade policies, and broader economic headwinds have created challenges that go beyond supply and demand. These forces though less visible to the average buyer, weigh heavily on affordability, market confidence, and the long-term outlook for real estate across the Lone Star State. One of the most pressing concerns is insurance. Texas, with its vast coastline, unpredictable weather, and susceptibility to extreme events, has seen insurance costs climb steadily. In some regions, premiums have reached levels that rival Florida, where climate risks and disasters have made coverage nearly unaffordable for many homeowners. In areas like Houston and coastal communities, storm risks drive rates higher, while across the state, inflation and construction costs have pushed insurers to raise premiums more broadly. For buyers, this adds a significant and often unexpected burden. A home that looks affordable on paper may quickly become costly once insurance payments are factored in, reducing demand in already fragile markets. Trade policy adds another layer of complexity. President Donald Trump's renewed tariff measures have reverberated through the national economy, increasing the costs of goods ranging from appliances to building materials. For Texas, a state that saw rapid construction growth during the pandemic, tariffs have made new home building more expensive. Lumber, steel, and imported fixtures, all staples of the building industry, have become pricier, squeezing developer margins and slowing some projects. While overbuilding has left certain metros like Austin with excess inventory, in the longer term, higher construction costs could tighten supply and make new housing less affordable for ordinary Texans. Economic uncertainty further compounds these pressures. With the Federal Reserve holding interest rates higher to fight inflation, consumer confidence has cooled. Buyers are more cautious, and investors are watching closely for signs of a broader slowdown. For homeowners, this uncertainty can translate into hesitation to sell or reinvest, creating pockets of stagnation even as other areas continue to grow. The broader national slowdown in private consumption and investment, just 1.2% growth in mid-2025 compared to 2% or more in prior years, underscores the fragility of the current environment. Together, these external factors paint a more complex picture of Texas real estate. Even as local markets show resilience or signs of normalization, homeowners and buyers face hidden costs and risks beyond their control. High insurance premiums, inflated construction expenses, and economic headwinds ensure that affordability challenges extend well beyond mortgage rates. For Texas, these pressures are reshaping the equation of what it means to buy and own property in 2025, turning what was once the nation's housing frontier into a more cautious and uncertain marketplace. When the Texas housing market undergoes such dramatic shifts, the voices of local experts and realtors provide some of the clearest perspective on what's really happening. Unlike broad statistics, their insights capture the ground-level reality of buyers walking through open houses, sellers weighing their options, and builders trying to move inventory in a market that looks starkly different than it did just a few years ago. In 2025, their commentary reflects both a recognition of current challenges and a belief that the market is undergoing a necessary correction rather than a collapse. Emily Gerard, CEO of Unlock MLS and the Austin Board of Realtors, describes the downturn in Austin as a necessary and overdue normalization. Her framing is important. While price declines in the capital city may appear dramatic, more than 20% from the peak, she stresses that the market had reached unsustainable levels during the pandemic frenzy. In her view, what buyers and sellers are experiencing now is not a crash but a recalibration, bringing prices back toward a sustainable trajectory. This perspective is echoed by many realtors who recall the chaos of 2020 to 2022, when multiple offers, waived inspections, and relentless bidding wars pushed both buyers and agents into uncomfortable territory. Other experts highlight how the balance of power has shifted. Austin-based realtor Jeremy Knight notes that, with inventory historically higher in the latter half of the year, prices almost always decline seasonally. But combined with broader headwinds, he expects prices to continue falling in 2025. Still, Knight points out that there are a lot of buyers on the sidelines. If mortgage rates dip even slightly, he predicts those buyers will re-enter the market quickly, potentially sparking bursts of renewed competition. His comments underscore the delicate balance between affordability and demand, where even small rate changes can shift the dynamics dramatically. realtors across Texas echo similar themes. In Houston and Dallas-Fort Worth, many agents stress that while prices have stabilized or even ticked up slightly, buyers now have room to breathe. Homes are no longer flying off the market within days, and sellers must come prepared with realistic pricing strategies. In San Antonio, experts point to the city's relative affordability as a continuing draw, noting that steady local demand has prevented the kind of volatility seen in Austin. These insights highlight a broader consensus: the Texas market is not collapsing but adjusting. Experts warn against panic but advise both buyers and sellers to recalibrate expectations. Buyers should recognize that while they hold more negotiating power, affordability remains constrained by interest rates. Sellers, on the other hand, must accept that the days of extraordinary price gains are behind them, at least for now. In many ways, the expert voices serve as a reminder that real estate markets are cyclical. The boom times of the pandemic were always unsustainable, and what Texas is experiencing now is, in the eyes of seasoned professionals, a healthy shift back to balance. For those who lived through the frenzy, the slower, more deliberate pace of 2025 may feel unfamiliar, but it may also represent the kind of stability the state's housing market has long needed. Looking ahead, the outlook for Texas real estate in 2025 is one of moderation, balance, and cautious optimism. After years of extreme swings, first the pandemic boom, then the sharp correction, experts widely agree that the market is unlikely to crash but also unlikely to return to the rapid appreciation of the past decade. Instead, the rest of 2025 is expected to bring stable prices, steady if unspectacular sales, and a more sustainable pace for both buyers and sellers. One of the strongest predictions centers on interest rates. While mortgage costs remain elevated, analysts anticipate some modest relief by the end of the year. Rates are projected to hold steady in the short term but could drift downward if inflation continues to ease. Even a small reduction, from the 6 to 7% range to closer to 5.5%, could release pent-up demand, as buyers who have been sitting on the sidelines re-enter the market. This would provide a boost to sales without necessarily sparking the kind of runaway bidding wars seen during the pandemic. In terms of pricing, stability appears to be the theme. Median home prices across Texas are forecast to hold near current levels, with some metros experiencing slight gains and others modest declines. Austin, the most volatile of the state's markets, is expected to see continued price drops through 2025, though at a slower pace than the sharp declines of the past 2 years. Dallas-Fort Worth and Houston are likely to remain steady, supported by strong local economies, while San Antonio should maintain its role as the affordable alternative that continues to attract buyers priced out elsewhere. Another important outlook involves inventory. Supply is projected to remain elevated compared to pre-pandemic levels, giving buyers continued leverage. Homes are expected to stay on the market longer, reinforcing a calmer environment where negotiation replaces urgency. For sellers, this means adjusting strategies, pricing realistically, offering concessions, or investing in property improvements to stand out in a more crowded field. Builders, too, will likely keep using incentives such as mortgage buydowns or closing cost assistance to attract hesitant buyers. External pressures will remain a factor. Insurance costs, especially in climate-sensitive regions, are unlikely to fall, and construction expenses will stay elevated due to tariffs and global supply issues. These add-on costs will continue to weigh on affordability, even if mortgage rates dip. As a result, the market's recovery is expected to be slow and steady, not dramatic. The overarching prediction is that Texas real estate is settling into a new normal. Gone are the extremes of double-digit annual price growth or frenzied sales. Instead, 2025 is shaping up to be a year of balance. Buyers gain choice and leverage, sellers adapt to realistic pricing, and the state's long-term fundamentals, population growth, strong job markets, and relative affordability, help stabilize the market. For Texans, the future of real estate may not be as flashy as the past few years, but it promises a healthier and more sustainable foundation. Texas housing stands at a crossroads, past boom highs versus present corrections. Will the state stabilize into balance, or are deeper shifts coming?